The 8-day currency collapse that ended an empire is the US dollar next. What if everything you trusted about money vanished in just 8 days? What if the currency that backed the most powerful empire on earth crumbled so fast that even the government couldn't stop it? That's exactly what happened to Great Britain, and the warning signs are now appearing around the US dollar. If you want to understand what could shake the global financial system next, stay right here, because this story will change how you look at money forever. And if you haven't already, please subscribe so you never miss a story that could protect your financial future. For centuries, Britain ruled the world, okay? Its empire stretched across every continent, and at the center of that empire was one of the most trusted currencies on earth, the British pound sterling. The pound wasn't just money, it was power, prestige, and global dominance wrapped into paper and coin. But in September 1992, everything changed in just 8 days, and one man walked away with over $1 billion in profit. To understand how it collapsed, you need to go back to 1990. That year, Britain made a decision that would haunt it for decades. It joined the European exchange rate mechanism, known as the ERM. The ERM was designed to keep European currencies stable against each other, preparing the continent for what would eventually become the euro. Under the ERM, Britain was forced to keep the pound within a fixed trading band, specifically at a rate of 2.95 German Deutschmarks per pound. The problem was enormous from the very beginning. Britain's inflation rate at the time was running at triple the German rate, an almost impossible gap to bridge within a fixed currency system. The British economy was already suffering from a painful recession, and those sky-high interest rates were crushing homeowners and businesses across the country. Meanwhile, Germany had just reunified, absorbing the economically devastated East Germany in its central bank. Bundesbank had raised interest rates dramatically to control the resulting inflation. This created a horrifying trap for Britain. To stay in the ERM, it had to keep interest rates dangerously high, but those same rates were suffocating its own economy. Currency traders and financial analysts began to whisper the same quiet conclusion. The pound was overvalued, okay? And Britain couldn't sustain this position. In a modest Manhattan office, a 62-year-old Hungarian-American investor named George Soros was listening very carefully. Soros had survived Nazi-occupied Hungary as a teenager and built one of the most successful hedge funds in history, the Quantum Fund. He had already developed a theory he called reflexivity, the idea that markets aren't efficient and that investor perceptions actually shape the reality of prices. Now, he saw something very specific, a government desperately defending a currency at an impossible rate, with dwindling reserves and rising economic pain. Soros believed the UK had entered the ERM at far too high a rate, and that the British government simply lacked the firepower to defend it. He began quietly building a short position against the pound, essentially a massive bet that the currency would fall. His chief fund manager, Stanley Druckenmiller, had already identified the opportunity months earlier after studying the British economy in depth. But it was Soros himself who pushed the strategy to its most audacious extreme. When Druckenmiller proposed betting $1.5 billion against the pound, Soros reportedly told him, "There comes a moment when you have to go for the jugular." He authorized a position that would swell to $10 billion, nearly twice the GDP of some small nations, all betting that the British pound would collapse. Then came the spark that ignited everything. On the evening of Tuesday, September 15th, 1992, a bombshell interview began circulating through financial newsrooms around the world. Helmut Schlesinger, president of Germany's Bundesbank, had spoken with the Wall Street Journal, and his words were reported in the German financial newspaper, Kindelsblatt, with explosive consequences. Schlesinger has suggested that a more comprehensive realignment of currencies might be necessary, essentially hinting that the pound was overvalued and needed to fall. Schlesinger would later say he believed he was speaking off the record and that he never intended to trigger a crisis, but the damage was already done. Currency traders across the globe now had exactly the signal they were waiting for. A top European central banker was indirectly telling the world that Britain couldn't hold the line. By the morning of Wednesday, September 16, 1992, Soros's quantum fund had already expanded its short position from $1.5 billion to a staggering $10 billion. He was leveraged 10 to 1, borrowing $9 for every $1 of his own capital to maximize the size of the bet. Word spread instantly to the trading community that Soros was making one of the largest currency bets in modern history. Other hedge funds and currency speculators followed immediately, piling onto the short position with their own billions. By the time London markets opened that morning, tens of billions of pounds were being dumped on the foreign exchange markets simultaneously. The pound began trading dangerously close to the bottom of its permitted ERM band, triggering panic in the British Treasury. What followed was one of the most frantic and desperate days in financial history. The Bank of England was legally required under ERM rules to accept any offers to sell pounds during trading hours, turning it into a buyer of last resort in a collapsing market. Early that morning, the bank spent £300 million buying pounds twice before 8:30 a.m. It made almost no difference. Traders were dumping sterling faster than any central bank could absorb it, and the pound's value barely budged with each purchase. By 9 a.m., Chancellor of the Exchequer, Norman Lamont, called Prime Minister John Major with devastating news. The buying strategy was completely failing. In desperation, the government turned to interest rates. In a single morning, interest rates were hiked from 10% to 12%, a move of unprecedented speed intended to make holding pounds more attractive to investors. When that failed to stop the bleeding, the government announced rates would rise again to 15%, a level that would have been catastrophic for British mortgage holders and businesses. But the market didn't even flinch. Traders and investors knew the truth. Hiking rates to 15% during a recession was politically and economically unsustainable, and the government would be forced to reverse course. The Bank of England was buying up to £2 billion of sterling every single hour, and the pound kept falling with nearly every purchase. By some estimates, the bank spent 40% of its entire foreign exchange reserves in this futile defense, burning through the national treasury in a matter of hours. John Major, the British Prime Minister, had staked his political credibility on keeping Britain inside the ERM. Devaluing the pound had destroyed a previous Labour government in 1967, and Major was desperate to avoid the same fate. But by early evening on September 16th, the reality was undeniable and brutal. Britain's reserves were nearly exhausted. The interest rate emergency measures had completely failed, and the pound was still falling. At 7:30 p.m., Norman Lamont walked in front of cameras and made the announcement that would define the era. Britain was suspending its membership in the ERM, effective immediately. And the pound would be allowed to float freely on open markets. The date was burned into British financial memory forever. September 16th, 1992, Black Wednesday. In the weeks that followed, the British pound crashed approximately 25% against the US dollar and 15% against the German Deutsche Mark. The UK Treasury later estimated the total cost of Black Wednesday at £3.3 billion, a staggering bill paid entirely by British taxpayers. The Conservative government of John Major never recovered politically. Their poll lead collapsed catastrophically from 2.5% ahead of Labour before Black Wednesday to 29 points behind just 1 month later. 5 years later, Conservatives suffered a historic landslide defeat in the 1997 election and would not return to power until 2010. Black Wednesday also permanently shaped Britain's relationship with Europe. The trauma of the pound's collapse was a major reason. Britain never joined the euro, and it fueled the Euroscepticism that would eventually lead to Brexit decades later. And George Soros' quantum fund made an estimated profit of over $1 billion in a single day. Some accounts placed the figure as high as $1.5 billion. His fund's value surged from $15 billion to $19 billion almost overnight. And within months, it had grown to nearly $22 billion. He earned a nickname that still echoes through trading floors around the world. The man who broke the Bank of England. The British Empire had already faded from its colonial peak, but black. Wednesday was the moment the world understood that even mighty nations could be brought to their knees by currency markets. Now, here is the question that should keep you awake at night. Could it happen to the United States dollar? The US dollar has been the world's reserve currency since the Bretton Woods Agreement after World War II. Today, as of 2024, the dollar still accounts for roughly 57.8% of global foreign exchange reserves. But that number has dropped sharply from over 70% in the year 2000. In the 1960s, 1970s, the dollar represented nearly 85% to 90% of global reserves. That long, slow decline is not random. It reflects a deliberate, accelerating global effort to reduce dependence on the dollar. The BRICS nations, Brazil, Russia, India, China, and South Africa, along with newer members, now represent a major share of global trade and economic output. China and Russia now conduct more than 90% of their bilateral trade in yuan and rubles, completely bypassing the US dollar. Brazil and China signed a yuan-real trade settlement agreement in 2023, removing the dollar from one of the world's largest trading relationships. China has also sold over $53 billion in U.S. Treasury bonds in just the first quarter of 2024 alone. Foreign ownership of the U.S. Treasury market has dropped to just 30% as of early 2025, down from over 50% during the global financial crisis. According to J.P. Morgan, de-dollarization is most visible in commodity markets, where a growing share of energy is now being priced in non-dollar contracts. China's alternative payment system, CIPS, already connects over 1,467 financial institutions across 119 countries, offering a direct challenge to the US-controlled SWIFT system. Now, the parallel to 1992, Britain becomes impossible to ignore. Britain, in 1992, was defending an overvalued currency with dwindling reserves, high debt, and an economy under internal strain, while the world quietly positioned itself to move on. The United States today carries over $36 trillion in national debt, the largest in world history, while geopolitical rivals are actively constructing alternatives to dollar dominance. When the U.S. weaponized the SWIFT financial system against Russia in 2022, it sent a clear message to every nation on earth. The dollar could be used as a weapon against you, too. That realization accelerated de-dollarization faster than any economic theory could have predicted. However, and this is critical, the dollar is not the British pound of 1992. The pound was being artificially pegged inside a system it never truly fit. The dollar floats freely, and no single speculative attack can force the US out of a fixed exchange rate band, because there is no band to break. The dollar still dominates 88% of all foreign exchange transactions globally and remains on one side of nearly 90% of all trades. No alternative, not the yuan, not gold, not crypto, currently has the liquidity, depth, or trust to replace it overnight. But history doesn't always announce its turning points in advance. Britain's empire didn't collapse in a single decade. It eroded slowly, and then, suddenly, it was gone. The question isn't whether the dollar will collapse tomorrow. The question is whether the slow, steady erosion of dollar dominance will reach a tipping point, and whether, when that moment comes, the financial world will move faster than any government can react. George Soros made $1 billion because he saw what governments refused to admit. The next seismic shift in global currency may not announce itself with headlines. It may begin quietly. In boardrooms, in Beijing, in Riyadh, in trade agreements written in rupees, in yuan, and in the slow, patient repositioning of the world's largest economies away from a system built in 1944. So, here's what we want to hear from you. Do you think the US dollar can maintain its dominance over the next 20 years? Or are the warning signs of 1992 already repeating themselves on a much larger stage? Drop your thoughts in the comments. We read every single one, and your perspective matters in this conversation. And if this story gave you something to think about, please subscribe right now, because the stories that shape your financial future are exactly what we bring you every week. Thank you for watching. Stay sharp, stay informed,